Hello and welcome to BQ Prime. A very good afternoon to all, good morning, I beg your pardon, to all the viewers. I am Hiral Daria. Overall, yes, the sentiment is negative in terms of where markets go in today's session after the kind of surge that we saw in yesterday's day of trade on the back of the weekly expiry, but it's mainly Infosys and the IT majors which have played spoil sport. We are somewhere around those 19,800 levels as we speak, but cuts of almost around 0.9% coming in there. And if you see in terms of Bank Nifty as well, we started off the trading session with support coming in from the banking majors, but there is cooling off coming in there as well. After hitting a high of 46,369, we've gone down to levels of around 46,073 as we speak. So interesting day of trade, a lot of stock specific action, not only in the large cap space but also in the broader markets. And you have a Reliance Industries that will be reporting numbers in today's session, so there is going to be some interesting moves on that counter today as well as early next week. Joining us on the show to discuss the individual counters is Devarsh Vakil from HDFC Securities to tell us more in terms of what's in store from here on. Devarsh, uh, good morning and welcome to the show.
Good morning. Thank you for having me.
Devarsh, let's start with a couple of counters which have reported numbers. Firstly, you have a HUL. The disappointment has come in with regards to where the volume growth is concerned because that has almost halved. What's your view on a HUL taking the Q4 numbers into consideration? Q1 into consideration. And with that, let's also look at a ITC, which has been probably galloping at a different pace altogether.
True. So HUL did announce about 6% revenue growth. That was below our expectation because most of the growth happened because of the inventory destocking by the trade in anticipation of the price cut. So almost there was only 3% volume growth. In near term, these stable commodity prices growth will be there, but it will be more flattish in our uh, expectation. See, the smaller players are also gaining market share. They are also benefiting from the softening of the RM material, and they are passing on that benefits. And that's why I don't think HUL will be able to increase any market share. We have modeled a gradual recovery in demand over the next 2-3 quarters, and because whatever price cuts which are going to happen now, there is a lag or 2-3 quarter lag, and after that demand will pick up. Right now, it is quite expensively valued. Our expectations are that even if we model for this growth, it is trading at almost 47 times our June 25 earning. And even if we give that much valuation, we come to a value of 2550. So around 2650, we have a reduced rating on HUL, and we think that there are better opportunities in the market, as you have mentioned, like companies like ITC, which we have been recommending for a while.
Right, so that's with regards to FMCG players, that's HUL as well as ITC. The other name that is in focus in today's session is Infosys. 7 to 10% cut coming in terms of the markets, the guidance cut that has come in there as well. And that's not something that the street was actually anticipating. Devarsh, how are you looking at Infosys, number one? And two, if you have to look at the sector as a whole, how are you dividing it specifically between the large caps as well as the mid caps? Because the trend that I've been picking up is that from the mid cap counters, specifically the companies which do not have a large exposure to the BFSI space, they are the ones who've done much better as compared to the large cap names.
That's true. So first, let's talk about Infosys. So Infosys growth print was about 1% QOQ on constant currency terms. That was actually a little better than the market expectation and peers. But they have lowered the guidance to 1 to 3% in constant currency terms, which implies almost 0% kind of a sequential growth over the next 3 quarters. So management has attributed this cut in guidance to lower than expected volumes and lower ramp up. But we see that these recent deal signings, especially they have almost net new $1.2 billion of new deals which they have got here, and that is one of the highest. These are mega bookings they are doing. So that gives us the visibility at the end of this fiscal year and in FY24. Our analysts expect that there will be about 3% constant currency growth in FY24, and that should recover to 10% kind of growth in FY25. So once the FY24 is over, there are a lot of positives because of these new deal wins. They are focusing on improving the operating profile margin, and there they have a lot of pricing. These new orders are coming in at a little higher in their pyramid of margin. So these automation related or generative AI related projects, they will improve the margin in the portfolio mix. So we think that these orders will also improve the utilization going forward, and margins are expected to improve by 300 basis points afterwards. As we know, they have fantastic management. They generate a lot of cash. Almost 96% of the cash is free cash flow, and that is shared in the form of dividend and the buybacks by all these IT majors. So we have lowered our target, but we'll still keep add rating on Infosys. We think that around lower levels one can accumulate it, and 1450 is our target based on June 25 earnings. So a low probability event has happened, and because of that, guidance has been cut. At lower level, we will be buyer in companies like Infosys. We continue to like other majors like TCS. These are relatively safer bets in your portfolio. And as you mentioned, the mid cap and small caps are actually performing quite well. We had come out with a report on Zensar at the beginning of the year around 200 rupees, and it has done fantastically well. So there are pockets of areas in IT mid cap where you can look for better opportunities compared to large caps. These are for the institutions where if you want to put large money to use, you can use these stocks. Otherwise, for retail investors, there are opportunity in the mid caps, especially in the product space. There are companies in the product space which are doing quite well, phenomenally well, and that's where retail investors should focus on.
Right. So that's with regards to where IT as a space goes. Moving on, the banking names are in focus as well, Devarsh, because clearly what everyone has been of the opinion is that for Nifty to get to that 20,000 mark and sustain above that, participation of IT as well as banking majors is absolutely crucial. IT, I don't know how much it will contribute from here on, taking the numbers into consideration. But how are you viewing the banking space so far with the run up that we've already seen?
Banking is the maximum opportunity, the best opportunity we have in the financial space right now. In fact, in the market, as you know, we have been quite bullish on the financial space. It is about 40-45% of the index, and it should be the part of every investor's portfolio. The kind of numbers and the growth opportunity they present are phenomenal. First, in the PSU banks, the numbers are coming out of the PSU stable. I think there is a still possibility of a re-rating from here. The numbers are quite phenomenal. Apart from other private sector banks where we have been bullish for longer term, there also like quite a bit of growth has happened and valuations have tempered down. So there also opportunity lies. Another opportunity is there in the wealth management space and other non-lending financials like asset management companies, registrar companies, and other stock market related players. Depositories are available in the financial space. So I think these are the spaces where we will see a lot of opportunity to invest and grow from long term. So PSU banks, private sector banks, and non-lending financial, all these three sectors, I find a lot of opportunities.
Right. So that's with regards to where banking as a space goes. Now let's talk about a few other names which are in focus today. One is India Mart. On the back of earnings as well as the buyback that has been announced, what would you advise investors to do with the India Mart?
So the results were there, and it was fantastic. About 78% growth was there at 83, and they also approved a buyback about 500 rupees, 500 crore buyback. It's about 12.5 crore shares at a premium about 4,000 rupees. There is 30% premium over the CMP. The revenue has grown by 26% at 282 crore. So it's a small buyback compared to the equity, but it shows the intent and the growth which is possible in this space. So those who are invested in the company can continue to remain invested. I think future looks good there. Other areas where technology is playing space in this platform business. Earlier they were quite expensively valued, but these kind of return of cash to the investors give a lot of comfort to us.
Right. Moving on, United Spirits reported numbers. Firstly, what do you make of the quarter, and what's the roadmap ahead according to you?
Right. So I have to look at the numbers in detail. I haven't gone through them that in detail, but overall, the area where we are continues to remain bullish is this consumption area where the lifestyle changes are happening, and the more social acceptability of all these habits are going to go through an S curve as we become more prosperous, the disposable income increases, the traditional expenses on roti, kapra, makan will move to consumption side, and that's where when an aggressive management and a sector meets, there could be a lot of growth opportunity. At current prices, they may look little expensive, but you'll have to pay a top-notch dollar for acquiring these companies and holding them for longer term. So my view remains bullish. I need to study the numbers in detail to come out with an opinion.
Right. Moving on, Tala Platforms is seeing some smart moves on the back of earnings as well. The profits have jumped almost 35%. What is your view? Because HDFC Securities has been positive on this counter as well.
Yes, so our institution team is positive on the counter and they have upgraded their target. So Tanla is expected to witness a growth acceleration. Basically, it will be it will be led by the revival in the enterprise business. There, they are seeing a lot of uptick in volume. The ILD prices have been hiked, and as we know, UPI and OTP related business, the transactional SMS traffic is continue to go through the roof. The If you see the number of UPI transactions and led by the a lot of SMS which we see in lot of transactions, that business continue to give a lot of growth to Tanla. They have about 30% increase in the prices in their ILD business. They have done some good acquisitions, and these client specific issues are going to be handled by them. Their acquisition of value first, their also turbo acquisition, all these platform acquisition will help them come out with the products which are into anti-phishing side, which are into other platforms that will help the company growth forward. So we have a buy rating on the company, and our analyst put about 20 times FY20 five earnings, and their target is 1350 on the counter. So we have a buy rating, so I think investors should continue to hold this company. And if there is any decline in the prices, in correction, you should keep accumulating this stock for a target of 1350.
Right. So that's with regards to Tadla. And moving on, the last stock I want to highlight is with regards to a Sun TV. If you see in terms of the stock, we are seeing some good moves in today's session. The stock is trading nearly at its day's highs as well. And you've seen, a massive uptick through the IPL as well in the first quarter, right? What's your view on that one?
So we have been bullish on the company. These are the companies which have a lot of value in their businesses. The growth was not there, and now we are seeing a lot of growth coming into discounters. They we were on. In fact, last summer the Diwali picks we have recommended this company with a higher targets of around 624, and it struggled for a while, and now we see that it is picking up space in the market. The market has recognized the value they have. The reason trigger for this, I think, has been the recent uptick in the OTT space, the volume growth in the advertising space. They have very huge cash. I think last I remember, almost 1100 crore cash was there in their balance sheet, which gives us the downside on the it gives support on the downside. So programs in Tamil, Telugu, Kannada, Malayalam, all these are getting traction. They have also launched a Bangla and Marathi channel, which is gaining a lot of market share. So we think that the stock is still quite attractively valued. Our analysts estimate about 15 times kind of FY24 earnings. Then the target of 624 is there for us. So there is still some room at right now. It has come up quite well in recent past. If you see the last few sessions, it has picked up from below 500 to now 540, 550 levels, but still there is some room to go there. We have a target of 624 for this counter. So those who have invested into this company, I advise them to continue to hold it.
Right. So these are few of the names that we should be watching out for as well. Thank you, Devarsh, so much for joining us on the show and sharing the views. So clearly, a lot of movers and shakers in trade today, but markets are nearly at the day's lowest levels as we speak. Let's quickly take a check. SBI, which is one of the top gainers in terms of Bank Nifty as well, but the breadth in terms of Bank Nifty has been in favor of the declines as we speak. If you see in terms of Nifty 50, we've maintained those levels of 19,800. No major moves there, but L&T, the top gainer on the back of the buyback that could be announced. That's what the company is meeting for. Divi's Laboratories, SBI, Apollo Hospitals, as well as ONGC are a few of the top gainers. Interesting view in terms of the losers, wherein you have the top three which are coming in from the IT majors, which is Infosys, HCL Tech, as well as Wipro. Reliance is also seeing profit booking in today's session. And yesterday, in fact, in that last half an hour of trade, we were seeing longs which were being unwound for an Infosys as well as with regards to Reliance Industries, which was clearly giving us an indication that we would not see that 20,000 mark soon. And you have a HUL, which has been trading under pressure on the back of the weak volume numbers that have come in for the first quarter. Moving from there on, Persistent System, KPIT Tech, both these counters trading under pressure. Polycab, which did see a smart run on the back of its earnings, is now seeing some bit of profit booking in today's session. And you have a Sarigama, which is down in trade. India Mart, we already spoke about it. Orcon is seeing some smart moves in today's session, 5 to 6% of an up move. So clearly, a day of stock-specific action. 20,000 seems to be again a far-fetched dream, but it seems that that number will come in closer towards the July month expiry, and that's what traders and analysts are anticipating so far. That's all that we have on this session. Thanks for watching. It is a day of heavy news. You will get to see a lot of management interviews on BQ Prime today, so please stay tuned.